be any hype around trading CPI. Let me show you how it's done. Trading CPI is done using pending orders set above or below the immediate consolidation range in line with the directional bias. In this case, the directional bias was bullish from the weekly time frame onto the 4 hour. We're looking at the bullish continuation.
2, 1. Hold for CPI. Okay, hold for CPI. Hold my sell 200 pip sell until you die for CPI, and it's in 6 minutes. 6 minutes, guys. Let's go. 20 more pips, 200 pips, and it's still going down. Simple as that. Simple as that, guys. Okay. 5 more minutes before CPI. There's 1,026 people here. Let's see whether I win or not. Okay. And if I lose, I don't care. I profit go. I profit go. 4, 3, 2, 1. Okay, it's going up. It's not hitting our break even yet. It might continue going down, guys. It's mixed data, okay? It is mixed data. It might continue going down. Let's see the data first, guys, okay? I'm still holding. Haven't hit my break even yet. I'm still holding, guys. Haven't hit my break even yet. Come on, gold. Continue going down. I know you want to go down, gold. Continue going down. Let's go. Continue going down. Let's go, gold. Don't give me 120 pips. I already caught 200 pips. I want 300 pips at least. 300 pips at least, gold. Come on. Let's go, gold. Hold until we die, guys. I already said multiple times. Hold until we die. Woo! Send feedback now, guys. CPI, we profit. Go. Woo!
Unless you know exactly what's going on with this week's economic news calendar. So let's review this together, baby. So in case you didn't know by now, news is what injects energy and volatility into the marketplace. And the reason we are utilizing this economic news calendar as the first thing we look at every week is because we are using this as our roadmap. We're utilizing it in order to understand which days will likely provide volatility and which days, which are the days with no red folder news, are more likely to lack volatility. And the reason we want to know this is because when there is a lack of volatility, when there is a lack of red folder news on a day, you risk trading consolidations. Price is more likely to be trading in a smaller range, again, lacking volatility, and those are lower probability conditions, which are very avoidable if we are aware of this calendar. Again, news injects volatility. Volatility is energy. We need energy and price action in order to have high probability expansive conditions, which are the easiest to trade. With all that being said, let's take a look at this week's calendar. On Monday, we have no news, so that is a day you want to be cautious on. Remember, lack of news, lack of volatility. Monday is a very lower probability day in this week to be trading in. Is that absolutely guaranteed? No. As with everything in trading, there are no guarantees, but just based on the historical data on how newsless Mondays behave, that is what is most likely, so just tame your expectations on that day. On Tuesday, we have CAD CPI and we have some New Zealand dollar news. So if you trade Forex, you trade CAD pairs, you trade NZD pairs, those can offer some potential nice setups, so keep an eye on that. As for indices and USD pairs, there is no news. One thing about indices though, indices are different than Forex, as Forex is very news reliant. Forex depends heavily on having news releases in order to see injections of volatility, where if we look at indices move different. They're not as news reliant and they're more reliant on the equities open, right? That's sort of like a daily red folder news event on indices. At 9:30, you're gonna have equities open on the NASDAQ, on ES. And you're gonna see these big moves of volatility, big injections every single day, which is why for indices, you can actually look to trade them daily, which is why they are my favorite asset to trade. But even that being said, that doesn't mean just completely ignore looking at the economic calendar for indices. That still does play a role. For example, on a newsless Monday, even if we have that 9:30 open, if that is flat, dull, doesn't do anything, being a red folder news event. Again, it's just something to keep in mind. It's not a hard rule to be like, all right, news this Monday, let me not trade anything at all. Just tame your expectations. Now, over here on Wednesday, we have GBP news and USD news. Again, by the way, FOMC meeting minutes is not the same thing as FOMC statement. A lot of people tend to confuse that and think that this is the same thing as a big news event and that you have to avoid the entire Wednesday. It's not the same. You're not going to see nearly the same amount of volatility on this FOMC meeting minutes. It's something you could easily trade on. Don't be scared of this. Thursday's looking like an absolutely gorgeous day to trade. We have a bunch of news across the board. We have 8:30 a.m. red folder news. We have 9:45 a.m. red folder news. And then on Friday, we have 10 a.m. red folder news. Powell speaking. Careful with that. You never know what they're going to say. Good luck. I'm running out of time. Bye-bye.
It's going to trade again. We back with a CPI. So today's CPI is kind of straightforward. I won't lie. CPI month to month, we increasing. CPI, core CPI, we're also increasing. And CPI year on year, we are also expecting an increase, which means the probability of a USD JPY buy is very high. Not financial advice. Okay. But let's go into gold, the technical part of gold Darara. So on gold, right? We have our baby gold here. We have to go to a higher time frame. Okay. Our baby gold. For me, I'm obviously, you know the vibes. I'm gonna trade US 30 for the news event, because I know what happens when I trade gold. It's gonna show me some other flames. Flames, I mean, like it's gonna try and do some ARA. And personally speaking, I'm not really interested in some ARA happening to me, okay? So let's get into this thing. We need to break this, which is 75. If gold is really going to be buying, I expect that it is going to buy, actually, technically speaking, because fundamentals, you must still trade them technically at some point. If it reaches a part where you can see that, let's say it goes to 80 or 90 before CPI, sell that thing. Not financial advice, because like, think about it for a second. It's not CPI yet, and it's already up there. Probability of supply coming in. You get my point. So that's basically today's analysis on gold. London session is probably buys on gold. So that's basically the view. So yeah, just continuation entries until you see that, okay, there is a change of character. Therefore, bye. Trader's gonna trade. I'm gonna see you later. Bye.
CPI, and let me show you how you can capitalize and make a lot of money. So tomorrow at 8:30 a.m. Eastern, a data candle will happen, and this is a very, very good thing because you can get a data setup which has an extremely high win rate. So at 8:30, we're gonna create a wick like this, and a weird candle with wicks on both ends, and you're basically gonna wait for a price to sweep one side of the candle, and then you're gonna target, and price is gonna reverse and go take out that other side. Here's another example of a data setup. This one went for over 100 points. This is my best and most consistent setup. It doesn't happen every single day. That's why it's so valuable. It's probably like once a week, maybe sometimes not even, but go research.
This came out and the inflation dropped to 2.8%, lower than expectation. What does this all mean? This is good or bad for the market? Let me explain to you guys in a simple degen term. If inflation goes down, interest rate will come down, meaning there's gonna be more rate cuts. The markets is gonna pump. And if inflation goes up, the opposite happens. So yes, this is bullish for the market midterm to long term. And if the Federal Reserve really shows a sign of confidence to do more rate cuts, surely are gonna pump back super high. But again, this is gonna be a long-term process. Maybe next few months. Be patient, we are almost there.
It's NFP time, and you can see where price is really like respecting the support. Now if we go on the 4 hour, we still have some time to move here to 99,225 is what I'm looking at. However, you see this engulfing candle that created this area, it would need the same type of momentum to break through that area. And we're by a 1 hour zone that we're failing to break. So we're gonna stay above this. So we're gonna go up. And we're gonna go to 99,245. Let's see what happens. And we're about to hit my level. I should probably put a line on it. So close. Luckily it went to that area. But again, price action told us before it was respecting the support. It was letting us know. So we're gonna need a candle of this type of momentum to break through this area. Otherwise, ain't happening. And this is just a retest. Yo, she's playing with me. I put it on 99,225 because that's what I originally said in the first part. Do you see this? Like, and we hit 99,225. Yeah. And what time is it? It's 9:08. Yeah.